Why was the stock market created? To understand that, you have to go back to the early 1600s. In 1602, the Dutch East India Company, or VOC, faced a major problem. Exploring trade routes to Asia required huge capital and enormous risk, so they pioneered something radical. They sold shares of their company to the public, allowing everyday citizens and wealthy merchants to invest in future profits. In return, these investors received dividends, a share of the revenue from global trade. This was the world's first IPO, and it created something the world had never seen: a secondary market where investors could buy and sell shares before the voyage even returned. And so, in Amsterdam, the first formal stock exchange was born, a place to trade ownership in companies, not just goods. This was the beginning of capital markets, turning business ownership into a commodity. Now, fast forward nearly 200 years. It's 1792 in New York City. America is young, the economy is growing, but the markets are chaotic. No regulation, no structure, and no trust. So 24 brokers met under a buttonwood tree on Wall Street. They signed the Buttonwood Agreement, promising to trade securities only among themselves with standardized fees and rules. This wasn't just a handshake deal. It was the seed of what would become the New York Stock Exchange. By 1817, the NYSE was officially formed, creating a structured marketplace for trading bonds, bank stocks, and eventually corporate equities. The U.S. stock market was now open for business. From there, the market evolved. Railroads, oil.steel, tech. As America industrialized, companies raised capital by issuing shares, and investors gained the ability to grow their wealth by backing those companies. But who controls the market now? You might think it's the traders on your screen, but the real power lies in the shadows of institutions. BlackRock and Vanguard alone manage over $17 trillion in assets combined. They own massive stakes in nearly every major public company, from Apple to Coca-Cola to GM Morgan.